Let's take a look at the DXY. No, that's the VIX. Okay. Look at how the VIX is played out. I've had this drawn out for weeks, maybe over a month now, probably. These levels. Okay. They played out exactly how I said they would play out. Look at this. So we had this drawn out while the DXY was still up in here. Okay. So none of this price action had taken place. And I had put here DXY. Breakdown here is bullish. Why? Because the DXY is depreciating, the value of the US dollar is going down. That means assets denominating it in USD, which is everything that we hold, are going to go up in value compared to the dollar. Bullish, right? And it also incentivizes investors, nations to put their US dollars into risk assets to preserve their wealth, because it's a pair trade. They want to outperform USD. So if USD value is going down, they want to hold risk assets denominated in USD. It's a pair trade. It's going to pump, right? This is how markets work. So we broke down from this supply, or from this demand, turned into supply. Beautiful. Nuke. We come back into this demand zone, just like how we had it drawn out. Did exactly what we expected it to do. Bounced. We lost the demand. Look at this nuke that happened today. Today and yesterday. Exactly how I said it would. Boom. Nuke. Lost it. So guess what? Now we get to change it finally to supply. Beautiful. So now we're at supply. So where are you going to see the next little bounce on the DXY? Well, where do you think it's going to be? Exactly where I drew this arrow, right? I had it right here before this took place. Boom. Boom. Nuke right down into this demand zone. So now you're going to see the DXY come into here. Okay. If we can lose this level on the DXY, we're cooking. Okay, we're cooking. Because now there's a free fall until these next major levels of demand. Free fall. Look at how strong this level was, this demand zone was for the DXY. Every time the dollar came down in this major demand zone, huge bounces, huge bounces, huge bounces, huge bounces. Boom, huge bounce. If we can lose this, okay, remember, DXY dumping is bullish. If we can lose this major demand zone, beautiful, beautiful, conducive for risk assets. Okay, love that. What else are the tariffs doing? Tariffs are bringing down yield. Okay, look at this. Once again, doing exactly what I had drawn out and what we had expected this to do. So we came up on these bond yields, right, that were pumping all the way up here, right? So the US bond market was pumping, okay, from September 24 all the way up to January 25. Also here in October of 23, this high. We drew all the way down. We were pumping all through this. Okay. So bonds are also coming down, right? Look how I drew these levels. This was our demand. I had this drawn out as demand while we're up here. We lost it. We turned it into supply. We come back down to this demand zone. Bounce. We lost it. Look at these nukes now. This is exactly how I drawn it out. Look, boom. Grab this liquidity, like just how I said it. Look where it came. Grab the liquidity. Probably get a little bounce up into here. Okay, to retest. And then come back down in there. Just how I draw it right here. Okay, bullish. Right, these are the things I'm looking at to say, I don't expect a recession because people are going to be incentivized to buy risk assets once these trade wars start to settle down. So now this is supply. We lost it. Beautiful. This is now overhead supply. So we're likely going to get either just a straight nuke down, which would be beautiful, or you get your little bounce into your resistance, back down into our demand zone. Okay. Same thing with bonds, with DXY. If we can lose this major demand here, you're coming all the way down into either here or down in here, right? So this would be a huge level to lose on bond market. Now, if the interest rates on bonds continue to go down, why is that bullish again? Well, because nations like China, massive investors, similar to you can call him, what's his fucking name? Warren Buffett. They're going to be incentivized to move money out of bonds and into what? Risk assets, because the yield that they're getting off their bonds is no longer worthwhile holding. So they're going to move into risk assets. So I look at the DXY nuking. I look at bond yields nuking. And I say, okay, I like that. Global liquidity is at all-time highs. I like that.